what is it going to take for you to get into gold to protect whatever's left of your purchasing power? And what kind of gold are you going to go into? Or silver for that matter? What are you going to do to protect yourself and your worth?
Welcome to a critical discussion with Lynette Zhang. In this video, we confront the pressing question: what will it take for you to safeguard what remains of your purchasing power? Lynette delves into the world of precious metals, particularly gold and silver, and how they can serve as your armor in a world where central banks and governments have been eroding your wealth since day one. Join us as we explore the strategies and assets that can fortify your financial future and help you break free from the cycle of wealth erosion. Discover the keys to a resilient and prosperous standard of living, with gold playing a significant role in wealth preservation.
And you know, it was JP Morgan Chase that said, or JP Morgan that said, only gold is money. Everything else is credit. And if everything is credit, it can only last as long as it can. And now, well, we're going to just get started so I can show you what I'm talking about. And the first thing is lovely Jamie Dimon plans to sell $141 million worth of JP Morgan shares. Disposal to be CEO's first such stock sale during his tenure. Why do you think he's selling it now? Now, he can say whatever he wants, financial diversification, because he's too heavily invested in JP Morgan shares or in the stock market itself, tax planning, or is it really about the rats leaving the sinking ship? Because what we know is that this system is in severe decline, and that decline is rapidly evolving. And they're bracing for all these new rules, loan losses after the earnings windfall. So we want to make sure, meaning the central bank, whose job is to protect the banks and themselves, not the public, but we want to make sure that the banks have as much capital as possible. And so there you go. I mean, they showed us in 2008 who was too big to fail, and that was the banks, of course. But part of the proposal will require banks, so these are the new rules, to hold more capital for certain types of trading. What? Would banks take risks with their deposits, with the money that they're holding? And JP Morgan's markets business will be expected to set aside 60% more capital. That's pretty substantial, especially when you're looking at a no reserve regime, which is where we are. But that could force smaller players out of the business and result in less liquidity. See, liquidity is the ability to easily buy and sell without moving the price. So we need the smaller players involved so that they can sop up that liquidity. Just like we've been watching that risk transfer from the few, so from the 1%ers to the many. This is happening on all different levels. But what are all of those types of trading that they're talking about? Well, this is the most current derivatives in the FDIC insured banking system. And these are speculative derivatives, which are actually what generates the most revenues for the banks. But they are speculative, and they are risky, and they are leveraged, and they are opaque. So they want a little bit more money put back for the next crisis. But, it was 2013 that they came up with the accounting tricks of compression and netting. So the reality is even though you're looking at this, nobody actually knows the true value at risk. This is just the price of the contracts after they do their funny accounting tricks with netting and compression, making it look smaller, and yet it's still higher than it was in 2008 and growing. I've done lots of videos on that. You can watch them. But, and here we are. This was from October 27th. Bank stocks sink past SVB crisis lows as rates upend business. Now, KBW Bank Index dropped to 29%. May's low was 25%. So what is this trying to tell you? That the latest leg down for banks come at a perilous time for the broader market, where the tech stalwarts that carried indexes to massive first half gains have also started to wobble. The markets are starting to crumble, right? Who is going to be in there to support these markets, especially with what's happening in the treasury market? Because I cannot remind you of this enough, that the treasuries are the foundation of the global financial markets. And all of these foundations, all of the tech stocks, all of the bank stocks, all of these derivatives on which all of these speculative bets are built, they're all starting to crumble. But because this is so opaque, you will not see it until it's too late. So what you're looking at here and what I show you all the time, these are all the warning signs of the breakdown. But I can definitely tell you that we are closer today than we have ever been before. And this really is all about the loss of purchasing power. So what I'm going to show you now is the truth, right? Because the lie began in 1913. And let's just look at a 1/20th of an ounce of gold backed a $1 bill. And you could buy 11 loaves of bread. If you had, if you had a dollar bill, you had a silver dollar, or you had a gold dollar, which is this one right here. See how teeny it is? There's a 1 ounce silver dollar. There's a 1/20th of an ounce, a $1 gold coin. And you could have bought 11 loaves of bread with either one. Let's go a little bit forward to 1933, when they took the gold away from the population. Then they also changed things, reset the currency from a 1/20th of an ounce backing a dollar to a 1/20th of an ounce backing $4. And you could buy 14 loaves of bread. So you see in this transition, it makes it look like things are getting better. They aren't getting better, and we know that. And have you really ever heard of anybody saying how great it was during the Depression of 1933, when we reset the currency and took the protection of the public, the gold that backed it? We started a transition away from that. Come to 1971. Now what backs the dollar is the full faith and credit of the government, which is what backs all fiat money all over the world. So as long as you trust the government, then you have faith in them, you'll continue to loan them money, extend them credit. And in 1971, a dollar only bought you 6 loaves of bread. That's it. $1's worth of gold, or a 1/20th of an ounce of gold, would still buy you 51 loaves. If we're actually looking at a $1 gold coin, roughly triple that. Roughly triple that. Now you tell me, can you see this pattern? What is it going to take for you to get into gold to protect whatever's left of your purchasing power? And what kind of gold are you going to go into? Or silver for that matter. What are you going to do to protect yourself and your worth? Because the system, the central banks and the governments, they have been robbing you since the day you were born. Since the day you were born. At some point, you got to say no. And so you need food, water, energy, security, barterability, wealth preservation, community, and shelter to sustain a reasonable standard of living. But a big part of that wealth preservation is gold. And you guys know, I don't buy bullion gold. I don't buy new stuff because, hey, I can't guarantee that there's going to be a confiscation. But good Lord, they've been doing it to you since the day you were born. Do you really think that at the very end, which is where we are right now, that they're going to go, we got enough. That's okay. You can keep what's left. No, their goal is to transfer all your wealth and put you in a situation where you have to do whatever it is that they dictate. You can go, they can go with interest rates. And what that does is it attacks your principal. And lest you think, because they have said over and over again, they're not going to take cash away. But lest you think that getting cash is going to protect you, they intend to put, if they haven't done it already, I don't know, but they intend to put a chip in the currency. So no matter how long you hold it, it's going to track those negative rates. So maybe when you go to use that dollar or redeposit that dollar, maybe it only has 25% of its value, of its face value, or 50%, or whatever that percentage is going to be. So the only place to truly escape is right here and right here. This is the only thing that's truly outside of the system. You can always convert it into whatever that current tool of barter is. But if you do not own gold and silver, you will not be able to protect your purchasing power.
As you continue your journey in safeguarding your financial future, keep in mind the keys to prosperity that Lynette shared: food, water, energy, security, barter, ability, community, shelter, and of course, the enduring value of gold. Until our next conversation, take care and stay vigilant in your financial endeavors. Thank you for joining us in this crucial discussion with Lynette Zhang. We hope you found this video both enlightening and thought-provoking. If you're as passionate about protecting your financial well-being as we are, remember to like, subscribe, and stay connected for more invaluable insights and discussions on wealth preservation and financial resilience.